Ladies and gentlemen, welcome to the market update, the weekend analysis. My name is K Kim. I'll be looking at the market today with you guys. And Merry Christmas to you and to your family. And thank you very much for your viewership and following my work through social media platforms such as this, YouTube, Stock Twitch, and Twitter. And so today we're going to be talking about, we still have another week remaining for the year of 2020, which is we have 4 trading sessions coming up next week. And we're going to try to figure out what we can expect, not only next week, but probably what we can expect going into the January of next year. I'm trying to focus on the long term, which I normally do on these weekend videos. And today we're going to be covering Spider. Where's my arrow? There you go. There's a spider. We're going to look at Qs. And let's look at Russell. And I've added Semiconductor today. Russell 2000 Semiconductor. They're pretty extended at this point. But keep in mind, when we use a term like extended, well, people thought it was extended months ago, right? So that's how the uptrend works, man. If you thought that this market is no way it can go any higher 4, 5, 6 months ago, well, it's even higher more now. And then now you think, well, for sure it's gonna not gonna end well. And that vicious cycle continues as the uptrend could very well continue higher with fluctuations along the way. And we'll talk all about that. We'll talk about VIX, and obviously, as usual, we'll talk gold, and then the video with the Bitcoin. And it is all coming up right now. So let's check out that 6-5 minute chart first on the S&P and follow up with what we've been talking about here this week. So this is where we closed on Thursday, actually Wednesday, right? Because today's Friday. So Wednesday, that's where we closed. We talked about it on the market or the daily update video that buyers wanted to hold, and at the time the gap was filled, right? And we talked about that when the gap gets filled, it's going to act as instant support, right? And so that's where gap got filled. And what happened was we gapped up, right? This is the first hour we gapped up. And then second hour, we saw a fade. And then on the third hour, came down, filled the gap. You see why tracking gap is useful, right? Because there was gap here. And that's where we found support. We gapped up on yesterday morning, right? And then we faded. And then the gap got filled. And that acted as support. And then finally, it needed to have 2 gaps being filled. And then finally, we made a move back up here above my short-term moving average. My short-term moving average is residing right here. So that was the third hour. And that's the last hour. And just because we had a shortened hour, I think my charting software is kind of compensated and put an extra candles there. But we only had 1, 2, 3, 4 hours trading, I believe. Yes, we only had a 4 hours trading today or Thursday, and so that's not really there. So we did close at 368.97, correct? So yeah, so 369. It says right here on the daily chart. It says 360 again, just 0.03 point. It doesn't really matter. So I think that was just there. I think the chart it's not there anyway. So it's about short-term moving average, and that's the important part. We talked about how there's a shenanigan might happen, right? We've seen something like this before. We talked about that on the Wednesday night's daily video, and I've also shared this chart right here. Talking about the similarity. First of all, let's talk about this here. So you can see here, we saw a gap up, and then we saw a shenanigan, And then initially what happened, this was back in what, December 14th. Initially we did see price getting back above, well above my short-term moving average, and initially fell lower, below my short-term moving average, but we talked about that higher low here. And then what happened was price gone back above my short-term moving average, and then we saw the rally coming up. So here we have a very similar price session, not as dramatic as this though, but we have that gap up here. That's dramatic, that's that pullback, but gap up here above my short-term moving average, and then a little bit of action there, trying to gap back above my short-term moving average. And as of today, as of now, we are holding above my short-term moving average there, right? So we want to give benefit of the doubt to the buyers in the short term, that we are, and that I think I was still bullish in the short term on Wednesday's analysis, maybe bullish to neutral, but I was bullish just because we were, this was when it looked like this, right? And we talked about how we don't want to get into a dramatic conclusion. Let's stick with the fact that we're still in the vicinity of higher low, which is similar to here, and that we just fill the gap. And we're talking about, Wednesday night's analysis, we fill the gap, and then you see that how we're back above it, and this low is definitely higher than this low. So in the short term, I want to be still leaning towards the bullish sentiment, because now we're back above my short-term moving average. And let's kind of zoom out here. And check out that midterm. In the micro term, we do have some little bit of that momentum that we saw last couple hours here, right? So with that, I also want to be bullish. I think I'm gonna label micro term bullish, short term bullish, and I think short term still bullish to neutral, but a little bit more on the bullish side. I'm giving it neutral in the short term just because we're still right on that neckline. Once we break above it here, that trend is down, because we haven't seen higher high yet. These are equal highs. So because of that resistance, I still want to give it bullish / neutral. Once we break above it, I'll label it flat out bullish in the short term. But in the midterm, you can see that we're still on that rising uptrend support, and we're still cultivating what? Higher lows, right? Higher lows and higher highs here. So we want to continue to give, and there will be shenanigans, there will be shakeouts, there will be some up and down moves, but as long as market moves in this fashion, we want to give benefit of the doubt to the buyers. And everybody always asks me, well, when are we going to give benefit of the doubt to the buyers? Well, when soon we start to see lower highs and lower lows. And so let's say you call that at high, and that's a lower high, that's a low. Where is that lower low, right? We don't see that lower low. For this to be a lower low, it needs to come down and break below this and start cultivating like this. And we saw something like that before here, right? And Ken, you can go back and check what I was saying in October. There's your lower highs and lower lows. We saw that. Once you saw that, lower highs, lower lows, downtrend. Short-term sentiment, bearish. All throughout October, I was bearish, right? In the short term. In the short term, I was bearish because we got lower highs and lower lows. We don't have that here. We got higher lows and higher highs, right? There will be some kind of move where make you think, okay, maybe this time we're going to do some. We need a confirmation with cultivation of the lower high and lower low. We can't just, conjecture and say it's going to happen. Remember, every time we do analysis, we have to do our analysis based on what we see, not what we think it's going to do, what we think it should do. We have to do our analysis based on what it has been doing, right? what it's been doing, what it's been cultivating, what's the trend right now. And then based upon that, your view is that you want to assume, right? One of the Dow theory suggests the trend is assumed to be in effect until it gives us a clear signal that it has been reversed. We have not seen any clear signal in the last month or so in this uptrend that the trend has been reversed, right? If anything, this trend is still going. So let's continue to give benefit of the doubt to the buyers in the overall picture, especially in the midterm here. Let's check out that oscillator and see if we can get a little bit of better picture. So the oscillator is still rising. It's messing up my oscillator a little bit just because of that these candles there, that is not really there, right? Because we had to shorten hours. And so that's what making that oscillator curl down a little bit. But again, overall perspective, it's not looking too super confident because you see these little jittery action there, because usually, you know, they like to go smoothly. There's a smooth move. There's a smooth move here. It's been a little jittery here. It's not as looking confident. Just because it's not as smooth there, but nonetheless, overall trend is up. The oscillator is telling us, despite the fact the market has been somewhat moving sideways here, oscillators continue to move higher. The trend is still up. That we want to continue to give benefit of the doubt to the buyers as of today. That's what he's saying. Also, I shared this. I tweeted this out. And this was on Wednesday, I believe. And so as you can see here, and just this is what I'm looking at is basically I'm looking at the track record of how this market behaved whenever we saw this signal on my oscillator, right? So this is a 4 times seeing that oscillator coming down, getting back up with a little wiggly action there in that blue box, right? And every time we did see a move, and there might be some shenanigan like we saw here, right? But we saw that on Friday actually. But ultimately what happened was this thing oscillator gotten all the way back up to the top of its band, and that's kind of what I was pointing out with this chart here, that it did get all the way back up to the top of its band, right? Do we see that? So every time we saw this signal appearing, we saw the oscillator going all the way back up and price following, and then that initially became that near-term top before we did see a correction in the short to micro term. So I was projecting that we want to give benefit of the doubt that this might happen, right? I can't say that it's going to happen for sure because I cannot see the future, right? But given the fact that we've seen these happening, I mean, things could change, but we want to continue to give benefit of the doubt and assume that the oscillator is going to go all the way back up there. You can see oscillators try about in a midway, halfway, right? So there's still room to be made. And this might even curl down a little bit and then get back up like something we saw here. We might see something like that here, right? And that could take a couple day or two to do that. So, and that's kind of assuming that we're going to get back up here and price might get up also, at least fill this gap. Let's go back to the daily chart. And so looking at the daily chart, looking at much bigger time, you know, on the 65-minute chart, all we are analyzing was this. That was it. That's all we are looking at, right? Such a small, you know, that's a little dot right there. So it's very important that you want to zoom out and understand the big picture, because this was all that was. We're just analyzing. As you can see, the big picture, we've been tracking this rising pivot where we're just right on it, right? We're still right on that level, trying to figure out what this market wants to do. Is this market want to make this into a little trap, get back down, or are we actually going to see a move to the upside, right? I do not know. You don't know. I don't know. Nobody knows for sure what the market is going to do. Remember what I said before? I've said that a lot this month on my weekend videos, that The real question is not, are we going to go up or are we going to come down? Real question is, what would you do, right? That's the real question, because if you're so focused on a one potential direction, then this market will consistently disappoint you, consistently get you upset and aggravate it, right? And that's kind of how I take it in the market. I say benefit of the doubt goes to the buyers, right? But I'm okay with this market going up or lower. Either way is fine for me. And essentially, that's how you want to approach this market. Like, you have your analysis and you have your high probability outcome, but you know how this market is? This market loves to do something that most people didn't think is going to happen, right? And this market is a master at that. So you always have to have a plan for either direction, and you're willing to face that opposite direction that you do not want to see. Because most people are biased. If you're long, you want the market to go up. If you're short, you want the market to go down. And there's no other way. And if something else happens, you get extremely, extremely angry, right? And if that's how you're going to trade it all the time, it gets really, really difficult to stay in the market. And it actually could ruin your life and ruin your emotion, just because market is so good at doing something opposite of what most people think it should do, or what it looks like it's going to do. So I don't try to predict that, especially in the short term, right? I believe the market, we're going to be in good bullish market in 2021. That does not mean we're not going to see a short-term pullback. That doesn't mean we're not going to have a corrections along the way. That does not mean we're not going to see shenanigans along the way. I'm willing to face all of that. I'm willing to navigate through it. And a lot of those corrections and stuff like that will probably give me opportunity to possibly accumulate more. But when we do our analysis, we say, you know what? I want to give benefit of the doubt here. I am okay with either direction. I'm willing to face either move, but knowing that we're still above it for now, we might break it, but for now we're above, and it seems to be that buyers been just looking at the 16-minute chart, buyers been holding on some of those important levels. Even just looking at my daily chart here, my short-term moving average is holding as of now, right? Is holding as of 9, and we also talked about the fact that market likes to do these suspense type of move after it breaks out of the base, right? I just drew that rectangle there, and so you can see that's a base, that's a base, that's a base. And after base, what happens is there's gonna be some kind of a suspense that's gonna happen, right? Happening here now, because market is going to make sure, okay, we did see a breakout after this, that's actually decent sized correction, right? That's a 10% correction, 10 or 12, and there's an 8% correction twice. Came down, got back up. So 10, 12, 8% correction is actually, just because the market moved so much this year since the March lows, it seemed like it's not enough correction. Did you know 2015 and 16, you guys remember what happened in 2015 and 16? I mean, everybody was going crazy, right? You hear terms like global financial market meltdown, right? Remember back in 2015 and 16, people were saying, oh man, all these billionaires are selling, man, this thing is we're gonna have some huge bear market. That was 2015 and 16. There's a huge negative commotion going on. Did you know that we saw 15% correction in 2015, and then we saw another 15% correction in 2016, back to back? Kind of a mini version of this. Remember, this is you know what? Let's measure it. 10. So 10 and 8. So 10 and 8. It's not 15, 15. It's 10%. It's 8%. It's not 15, 15. But I want you to think about that number. 10 and 8 is not 15, 15. It's a mini version. But what happened after 2016 when it broke out. We had a great year in 2017 known as the Trump rally. Remember that? So we seeing something similar here with 10% and 8%. And yet, everybody thought that this is not enough pullback. This is too shallow. Why? Because of this move. Just because we had such a huge move. Actually, this is a pretty decent sized pullback. Decent sized corrections. And I also look at that as a base. Also look at that as a consolidation, right? Market loves to do that. Make a move, consolidate. Make a move, consolidate. Make a move, consolidate. Make a move, right? So, and during that make a move phase, sometimes market likes to do this, come back down and retest the neckline, which is at 352. Sometimes it doesn't. If you ask me what it's going to do, I don't know. It's up to the market. I don't know if it comes down 352.77 to because sometimes market likes to come down and retest that base so that horizontal support can turn to a pivot because it's prior resistance acting as new support, and that becomes a pivot. Sometimes it doesn't. Sometimes we don't see that retest. So if you have to see this market going higher, that's the wrong way to be part of this market, because then you'll be extremely disappointed if this thing comes down to about 350. A lot of people who are chasing long up here, every day they're hoping that this market doesn't fall, right? And that's where the aggravation comes from. That's where this market is going to irritate the hell out of you. Because right now, there is a chance that this market wants to come retest. And actually, that's not bad, because what it's going to do, if it does come down to retest 352, it's going to solidify that trend even more. And guess what? Next year, we're going to hit some nice move in January. Because a lot of times, the market actually moves even stronger when it has a proper base. And then, market comes down like this, goes out, and comes down, retest that support. And keep in mind, it's not going to be exactly at 352, man. It might come down lower, or some shenanigans, somewhere in this vicinity. And then when this thing goes up, it goes much, much further, because it had a proper corrections. And in that process, we got those higher lows and higher high, the proper higher lows and higher highs. Instead of we just running from higher from here, right? Let's say we skip that pullback and we just run higher from here. And a lot of people will like that, especially if you chase long. It might want to come back down later. It might not come back down 352 though. If this thing does this, maybe it might not come back down as much. So either way, you're going to have to pay for it. Either way, market has to see certain pullbacks. It cannot go straight up. Right? If we go straight up from here, you might have to you might have to face a little bit bigger pullback. If it actually pulls back, we might see much, much bigger move. So either way, if you look at it longer term, it's good for the bulls. Either way it is. And that's kind of how I take it. Right? But as of today, with the price is holding what it seems to be above my short-term moving average and the rising pivot. So I want to give benefit of the doubt, as long as it holds that pivot there, that this pivot right here, that it wants to go back to 382, possibly 400. But in the event that we breach this level and this is coming back down, there's good chances it wants to retest at 352, maybe even some of my long-term moving average here. Right? Does that make sense? But until then, we want to continue to give benefit of the doubt to the buyer. So let's go to Nasdaq here. So Nasdaq made a new all-time highs. And it's always a good thing. People get so anxious about it every time the market gets and continue to cultivate new all-time high. These are the great things, right? Think about this, where the Nasdaq was. Nasdaq was here. This thing made a move since the March lows. How many people that there's no way this market can go any higher? And that was at 238. We're trading at 310 now. Right? And what we have to understand is that cultivation. A lot of people thought these pullbacks were shallow. It wasn't that shallow. Remember what I talked about 2015 and 16? There were 15% correction in 2015 and that was 15% correction in 2016. Look, we saw 15% and 10%. It's not 2015 and 16, but it's, you know, a little bit similar. So what I'm telling you is, those corrections that we saw here, that weren't bad, like shallow correct. It just felt like it. Just because the market moves so big like this, those 15, 10% corrections we saw on the Nasdaq felt like nothing. Actually, it wasn't. If any other time we saw 15%, man, everybody be freaking out. So that's a decent sized correction, and it happened on another one. So we saw 15, market made a move, we saw another 10%. And market likes to do that, because if we saw 15 and 10, we would see much, you know what I mean, bigger decline. The market likes to do this in, especially in an uptrend. Strong uptrend, comes down 10%, goes up a little bit and do 8%, turn it into a consolidation so that it doesn't lose too much of its gains, market protecting the buyers, and then breaks out. I want to continue to give benefit of the doubt to the buyers. If this thing falls back to retest any of this gap level or something like that, maybe, you know, maybe it likes to retest the neckline at 298, or we got the 283, the gap area right here, right? But as of today, I want to give benefit of doubt that because we're continue cultivating higher highs, we made a new all-time high, and we've been trading in that fashion. So I want to continue to assume that it will continue in that fashion until I see in my short-term analysis that that trend has been changed. Does that make sense? Let's go to Russell 2000. Same with the Russell 2000. And you know, people always look at this and say, wow, look at, you know, how because Russell 2000 just made, you know, since like September low. I mean, that's a 40% move in just a couple months. That's pretty crazy. That's pretty crazy, ain't it? Just because, you know, like Russell 2000, S&P, they tend to move like 15% or 20% a year. But when you move 110% since the March lows, people are just going crazy about this, right? But at the same time, if you look at it in a different way, this market's been giving you, right, opportunity to accumulate on all these pullbacks. And then it finally broke out. Look at these pullbacks, right? And those weren't like a little pullbacks, man. That's a what? That's a 10% correction, right? In a normal, like if 10% correction happened back in 2013 or 14, right? People would be freaking out. Yet people thought this is not enough pullback. But again, these were all opportunities. It was bound by that rising pivot, or it's a pivot resistance now though, right? And this time it's going higher, 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 higher every day without retesting it. I'm not sure when the retest is going to happen. What I said before, if this thing does come down retest, what a gift, right? But this is what I mean. Sometimes it doesn't retest. So people who missed out this move, they're looking at it here. I'm like, you know what? I'm going to wait until this thing retest the all-time high. It never got there. It never gave you that retest. And same people who thought, you know what, this thing is up too much. There's no way this is going to go any higher, right? And you can see that's what the market. And if you look at semiconductor, same thing. Look at semiconductor. Semiconductor is actually leader this entire year because since the March lows, it's up 130%. 130% move as a index. That is some crazy move. We've never seen anything like this in this such a short duration. So you can see how such a great, amazing buying opportunity it was. And you know, it's interesting because if you look at this, a lot of people are very, very hesitant to buy semiconductor after this thing. V-shaped higher, it was trading at 90s and then went to 150. People are like, there's no way, man. I mean, there's no way I'm buying. We had a that's a 5%, 7% pull, shallow pull back there. There's no way people are going to buy at new all-time highs after it's just V-shaped higher. Did you know from 150, it went to 225. It went up even faster and higher. You would have made more money if you bought at here and then held it till today versus if you bought it somewhere here and you thought you're happy about this gain. Right? And semiconductor is a great example. Sometimes it's going to give you very, very shallow pullback. You know why it does that? market is making sure people who missed out on this, it's going to be even harder for them. Because think about it, you want to get into semiconductor now, how could you? Let's say you're not part of this at all, and you've been looking for a great opportunity to get into semiconductor. How could you get into anywhere? Because now market moved 130%, you're going to be in fear that if you get in, it's going to pull back 20-30% or something. Like semiconductor is actually known for its volatility. That's what a lot of people like to analyze this. Because, I mean, it's known for its volatilities, right? I mean, when he makes a move, he makes a great move, though. You look at that. That's a 2017 move. But it's known for its volatility. Semiconductor is actually, a lot of people have a hard time analyzing it. Just because look at this move right here. I mean, that was a big corrections. And it's much more volatile. Normally, it's more volatile than Nasdaq. Yet this year, semiconductor just flying. And the higher it goes, the more difficult it's going to be for you to enter. Unless you're not already in it. Right? It's going to be very, very extremely difficult to enter. Because you think after a 130% move, well, how high can it go? Keep in mind, people are saying the same thing here. How high can it go? It went higher than from here to here move. All right, let's go to VIX here. So VIX actually popped, and this is kind of what I was talking about in these weekend videos as I, cover VIX on every market update video, that we're going to see some pops, and it's probably going to come back down. And then we haven't filled any, we still have these gaps that are remaining, and probably going to fill it sometime next year. But we are seeing, we've been seeing a little bit of pop here. There's a big pop actually. At one point, you see the upper wick. At one point, this looked like a big candle there. I think it was up 30% or something like that. But on the same day, pulled back. It's been coming back down. We're still in the vicinity of lower highs, right? And we want to, again, I don't want to put too much weight on the VIX. VIX is something kind of as a reference point, but I think next year, first quarter, probably gonna, come down, go up a little bit, and then start filling these two gaps here, and that's gonna be good for the market too. While the VIX is coming down and in the process of filling this gap, the market could move to the upside there. Let's go to gold. So gold is showing you some positive signals here. We found support on the 50% fib retracement support, and you can see my moving averages are kind of clustered here, and keep in mind they're all kind of moving higher now. So this is kind of inflection point, I think. See if we can get above this resistance here, and then start coming back up, hit that equal high with that, pull back. If we see something like that, I think that there's a good chance that gold is ready to resume with this primary term uptrend. But if we start to fall here, there's a good chance he wants to retest that long-term moving average. You see that pink moving average colliding with my last level of fib, which is 158 or 160. Let's go to Bitcoin. So Bitcoin fell, and looks like we got a little bit of gap open. So let's kind of do that. It looks like a little bit of gap is still open here. And we talked about this level, right? There's a gap. I've been tweeting things out that there's a gap here, and the gap wasn't filled. That's acting as a resistance. Let's say remove the Fibonacci for now. The gap didn't get filled. It would have been better if that gap got filled, and it didn't get filled. That gap comes all the way back. And then we did see come back down, fill the most of its gap, and we're holding there. So I think at this point, there's a good chance he wants to maybe fill it all the way. If we do, we'll probably come back down to 24. But that's a good thing about these gaps, because these gaps are going to provide support should the shenanigan continue to the downside. And keep in mind, Bitcoin is very hyped up asset class. We're going to see hype up move like these, and you will see like hype up, this downturn quickly. So that's kind of given, right? It gets make a big move. We can see a abrupt downturn. But for now, we're still in an uptrend, aren't we not? We got the higher highs, and that's a low, that's a higher low. Where is that higher low gonna be, right? Is it gonna be here? Is it gonna be 240, 224.75? That's what we're trying to figure out. I want to continue to give benefit of the doubt as of today. We got that gaps. Should the price come down, and we'll have to see how the market is gonna kind of discover the next support level, but that gap area needs to be filled in order to for the Bitcoin to continue to move higher to the upside. Well, you guys have a wonderful and safe Christmas with your family, and come back for you next week, and good luck trading next week. All right, guys, I've decided that I was going to, start a promotion for the month of December. And this is going to be, if you've been thinking about joining my Traders Club here, I am running this promotion until end of this month, which is end of December. So until the New Year's Eve, the 31st of December evening. So, as you guys know, and if you've been thinking about it, joining the Traders Club, I don't run promotion usually once a year. I do, and so this year, for the last month of this year of 2020, I'm running the investors membership, the yearly plan. So you would have to sign up for the investor membership to take advantage of this promotion. And so, a lot of people ask me, what's the difference between, just some of the things you talk about on Twitter and the, what you share on the, on your YouTube videos. Well, obviously, as you guys know, here's the plan there. As you guys know that, the daily update videos that you watch on a daily basis is looking at actually very, very short term of this market, just kind of forecasting what's going to happen this week, maybe next couple of days and things like that. On the daily, I do give you, on the weekend update videos, the weekend analysis videos, I do give you a little bit more comprehensive recap, giving you the longer term outlook, but it's nothing. And I'm not exaggerating things, but it is nothing like what you could find in the member videos. So obviously I got 3 plans here, but currently I'm only running the promotion for investor membership alone. And you would have to do the yearly, which, when you go back here to sign up, here, if you click on there, you'll get to that payment page, all of that. So, and it will get to that yearly pricing. I'll get to it. So basically, regular price is $4.90 a month for investor, and it's $39.90, right? $39.90 for a yearly. And with the promotion that I'm running until end of this month, end of this year, right? We got about remainder of this year, and you got some time to think about it, right? You don't have to make hasty decisions or anything like that. Think about it. If this is something you think it will be helpful in your own analysis, in your own navigation of this market, you can take advantage of this. So what I do for my members is that obviously they would have a full access to all of my long-term stock picks, right? So, and you hear me talk about this kind of stuff. I mention things, my recent trades, some of the positions that I hold, and I talk about it. I mean, you guys, if you go back to some of the videos back in like April lows and May lows, you guys remember me talking about, I like Google here, I like Apple here. You guys know that I was buying Bitcoin. All of those entries, exits, and add points, you get all of that picks and updates right here, right? Entry, add, and updates you receive as investor member. So, and these are not just like stock picks for the sake of stock picks, right? Like I'm picking stocks here and there. No, actually these are the stocks that I'm actually getting into. I will not share any tickers if I myself is not involved in it. So if you can think about, like, basically if I'm gonna get into this stock, for me to be investing on this stock or position trade, then my member is going to hear about it and get updates on it ongoing basis, right? So, and I know that a lot of members that I currently have, almost all of them come from day trading, comes from like swing trading, come from overnighting, scalping, you know what I mean, here, in and out kind of thing. And as they watch my videos, they realize they want to be more long term. So they don't have to be so occupied with the market. They want to look at things longer term. To able to do that, right, you really have to have a good analysis, macro trend analysis, right? This is something that I do with my members. If not a weekly basis, you would have these updates on this throughout the week, throughout the days. And also there will be special report videos where I will cover, we're talking macro, where the market is going next 10 years, right? I actually done just this recently, this new video for my members, right? S&P 500 destination, 16,000. And if you look at the number now, you're like, what? That doesn't, and if you watch my video, and this is about an hour, maybe hour and a half video, and there's a video like this in my special report video. There are videos like this, like 6 of them, you know, going all the way back to 2016. And I can stand on my 2016 analysis that I've done back in 2016 lows. I'm talking when Spider was trading at 180. We're talking S&P at 1800, right? We're sitting right now 3700, 370 on Spider, right? And I can still stand on that today because we understood the macro sense of this market. That's why we stood strong even after the COVID decline. And I've done a video for you guys here. If you go watch this right here, March 21st, this is a free video that I've done for my YouTube followers and my Twitter, my social media followers. And obviously member video will be much condensed and much more, you know what I mean, comprehensive and covering more areas. And there will be more videos like this on a special report section. And there will be more videos ongoing, giving you guys an updates where the macro sense, because things can change obviously, right? And so that's kind of that's how we've been navigating this market since 2016 lows, when Spider was at 180, right? Now Spider trading at around 370. This means Spiders could be at 1600, right? And I go over this with my members, and we talk about these kind of things while everybody is so concerned about these short-term fluctuations, always getting scared, right? So that's something that I always tell my members is that if you fully grasp on where the market is in a macro trend perspective, you won't be scared when there is these kind of fluctuations, volatility, because that's market, man. I mean, you cannot have this market without volatilities. That's just given, right? That's just part of this market, and people always trying to avoid it. That's the biggest problem. When you're trying to avoid volatilities, is when you're gonna miss out big runs, and that's, you know exactly what I'm talking about. And if you're, also if you have like a larger fund, you're working with a big capital, we're talking about $1 million or more, definitely you want to put a lot of that percentage of your portfolio into index fund, and then have some other portion get into some position trading, long term. You kind of want to have a good, well diversified portfolio, especially if you have a larger account. And this is where it comes handy here. I also go through my index fund investing guidance, guiding through which indices to get in and how much, which levels. And that's something that I go through every member plus or member semi-monthly report. So as investor members, you will get your semi-monthly report. And in those videos, I go through all of my current holdings, give you guys a review on it and an update, including my index fund positions, right? Keep in mind, again, for my members, every single tickers that I go through, every single one of them I am involved in. right? I don't just pick stocks and just tell you guys about it that I think it's a good buy and I myself don't have it. That way, you will continuously get updates on this, right? So my job as your instructor here at Traders Club is telling you where the market is going in the big picture, right? In the long-term picture and also intermediate term, right? Short term, we cover this on my free videos on our daily updates and even on the week, on those free videos that I do for you guys on YouTube videos. But with my members, I focus on the long term and then how we should be positioning ourselves, right? And along the way, you will get your updates on, I'm holding Google, I'm holding FedEx, I'm holding Alibaba, I'm holding Apple. Okay, what should I do? When should I close some? When should I buy? Which level I'm going to be buying more? Which level am I going to be closing it out or closing partial position? Things like that. So, right, that's what I'm saying here, a case holdings review, right? So macro trend analysis. And we have a video lesson library. And if you're really you really like this technical analysis stuff, you like analyzing things, you want to learn more about how I approach this market, there's tons of videos for members in a video lesson library. There must be, I don't know how many, 50 videos, some of them are like hour and a half, 2 hours videos, showing you all the way from like how to properly, set up your charts. How do you look at bullish divergence? How to look at your indicators? All of that. And some of you guys even wondering, what about those chart setups, okay? What about your configurations? I have those disclosed in my member area. If you want to get really techy with that, like if that's your thing, like you want to learn all this, you want to learn how to use these indicators, how to look at the market, all of that, you have that in my video lesson library. If not, you can just, you can use this membership to help in your own analysis and navigate this market, right? Obviously, the market guidance, right? I've done guidance for you guys here back in COVID-19. This was chart, right? Near the March lows right here. Something like this. There's analysis, a lot of analysis that I've done for my members back in March lows, April, May, June, where to buy, what to buy, right? And I've done something similar here, March 21st, right? March 27, right? We're talking about generation, maybe even lifetime buying opportunity. March 27, right? Major support, potentially bullish reversal. April 3rd, important inflection point. April 11, constructive follow through. April 19, okay, we might have the lows that put in. And we're talking when the S&P and the spider was trading at 220, 230, 240, 250, 260s. Now trading 370s. This is when, when the mainstream media were lying to you. TV, quote-unquote, experts were lying to you, right? Everyone out there were lying to you that this is a bear market rally, right? This is not going to end well. Well, guess what? 3-5 months later, we're at all-time highs. And guess what? Semiconductor and Nasdaq performed 80 and 90% since the March lows, 50% year to date. Majority of people were not able to forecast this. Do you know why? Biggest problem is this: macro analysis and forecast. We never were in a secular bear market. We're always in a secular. This is something we understood here at the Traders Club even after the COVID decline. I think Wall Street Journal came out, said something like middle of March that bull market is dead or bull market ends or bear market starts. You guys remember that article, right? Wall Street Journal or something, some other major publication, very, very popular, right? Bull market ends or bear market starting or something like that, right? No. We are never in a secular bear market. And all of this I explain in my videos, in my special report videos. So you understand. Are we in a macro secular bull market or secular bear market? Because in a secular bull market, you get those fast recoveries. In a secular bear market, you don't. And you gotta understand, you gotta able to distinct the two, right? Differentiate it so you can able to adjust your portfolio accordingly. March lows, April lows have been my biggest buying opportunities, right? I'm actually thankful for March lows and April lows that happened with the COVID decline. So obviously I do offer other plans here, other memberships, and those are for option trading, other things. But you know, for if you're, you know, looking to kind of understand these things long term and want to learn how to position trade and long term invest in this market because you're tired of getting in and out, getting stopped out. You look at your account last couple of years, really haven't gained anything. Where is the market? Again, market was 180 in 2016 lows. We're close to 400 to like this year, right? And because when you're in and out, a lot of times what happens is you miss out on a big moves. And then when you see a big COVID decline like that, a lot of people get scared. They trying to short, market goes right back up. And this is where people try and short, trying to, you know, time it the next leg down, thinking this is going to start a bear market, and they completely miss out and lose money and miss out that run. And I call that double loss because you lost money shorting and you lost the opportunity. So there's opportunity cost, missed opportunity cost, and you lost money shorting. So actually that's a double loss, right? So anyhow, so that's the membership there with the investor membership that I'm running right now. So feel free to go. I'll put the link below, description below, so you can check it out and go through. You can go through these things that I've presented to you. There's a performance here. There's a broker statement here for 2020. These are my win rates. You can see I got pretty high win rate, right? Because I do not get into a position in and out, in and out, in and out. That does not mean I get into a position that goes straight up right away. That is not what this is mean, right? What this means is, let's say I entered long, maybe this thing did this or this did that, but because I do not let this market get to me or trap me, all right? I don't want to fall into a victim of some kind of a shenanigans or head fake. Let's say I got into it here. I might add here. And you guys saw how I trade my Bitcoin trades. You guys remember that? Something like that. And then when I start getting it out, those are winning trades. Instead of getting stopped out here, getting stopped out here, getting stopped out here, getting stopped out here. You know what? I'm sick and tired of this stuff. I'm going to throw this ticker away. Month later, you come back, that ticker is like 30, 40, 50% higher. You guys know what I'm talking about. And that's the reason why I think I've been having really good win rates in the last 4 years. And last 4 years wasn't such a greatest market condition either. Because we've seen like market goes up, 2017 we tanked 12%, market got up, 2018 we tanked like 20, 25%, and then market got up and there was a COVID decline. So market was actually pretty volatile in the last several years. It was actually difficult seasons that we actually went through in the last 3 years. And I actually think, and that actually helps this market in the next 3 to 5 years have a good years, because we had such a kind of a volatile years last 3 years or so. So you can go through these and click on here, right? Join, right? Again, you have to sign up for the investor yearly plan to qualify for this special promotion here that I'm going to be running until the end of this month. Again, the last day will be December 31st, evening time. Click on here. So you'll come to this page, right? And then, you know, carefully go read through those. Make sure to fill out all the required fields and click on here, sign here. And then this is where you're gonna click on that, and it's gonna get to your PayPal account to put all your payment information, right? So hopefully, if you do sign up, I'm looking forward to trade and invest and navigate this market with you. If not, it is totally cool. Continue follow me and on Twitter and StockTwits and YouTube. And you can continue to follow me that way and follow my work. But thank you for listening to this presentation.